This is London with MarketHedge. Let's pay attention to Bitcoin. You're looking at the 4-hourly chart right now. What a great pickup last week. Let's talk about it. That specific video I brought to you guys, 4-hourly low RSI. Are you in the money? If so, congratulations. Nice hands on a hold over the weekend if you took. Hey, join the club. I did too. This specific account now, you guys have watched it grow. It's up over $400,000. I wanted to cross that metric and book it in. This is London. Former hedge fund owner, private, non-SEC, not financial advice. Let's pay attention now. Let's look at the specifics. Guys, let's look at the MACD. I'm really interested in the MACD. What kind of signals is it throwing your way? Once again, this is the second or third weekend we've had MACD histogram positive in the green, and it's been faithful. You guys can agree. On and through the end of the weekend, we jumped up and over that specific 20 moving average on the 4-hourly. Nicely done. You'll have to dig a little bit down into the hourly MACD to see a little bit of oscillation, a little bit of, let's just say, operation over and under this swinging. In terms of, this was a bear trap, by the way. In terms of what we're looking at, this move to the downside, especially on the hourly, just pay attention. We were looking for, after we got this squeeze on the Bollinger Bands along that 20 moving average, just look at this specific 1-hourly MACD rolling red, and what happened? Yeah, well, next thing we know, just bounce, boom, back to the upside. Now, you did have this lower catch here, really got some piping going on. If we're going to look at piping, as I will call this over the weekend, you guys will just see that is just a direct thread along a specific moving average. In this specific instance, we'll just call it that 1-hourly 20 moving average. And why do we know it was the 20 moving average on the hourly? Just look at how the bands are compressing on that 20 moving average. They'll only compress like that if you're along that 20. So just the piping, the straight top line resistance, bottom line support, and really just ready for a move with the constriction. But just note that bear, that specific bear trap, boom, did get you down straight into that preceding level of cross support. So let's get away from a bit of the bear traps, a bit of an unreliable indicator. Let's focus on that 4-hourly again. It's what we've been doing. It's been extremely reliable. You guys have been doing well. Hopefully you're just getting used to saying, well, I can almost trade based on MACD and RSI. That's a good thing, guys. That's a very good thing. So this is London, former hedge fund owner, private, non-SEC, not financial advice. As we look at the hourly, we're almost going to, let's dig into the specific wicks right now. If we're going to look at this top side resistance in terms of a near flat top on the candle wicks, we can see the bulls have pushed back up into and set a real good mark at that 109, call it a 109.3 to 109.4 top level of flat resistance. And we do have an ascending either on the lines that was on the lines just now. We can thread back to that, or we can look at the specific candle wicks. And yeah, we've got a real nice ascending triangle in the play here. So guys on the screen, in terms of the details of this though, you're going to note that our top line resistance is really going to require, if we're going to bust out of this and really sail to the upside, that top line standard deviation is going to require the bulls to flip this specific standard deviation to the upside on the 4-hourly. We're going to have to flip it and turn it from resistance, bam, to support and move up on top of that standard deviation. And that's going to require some momentum. We just went through the hourly. You guys just saw what builds that momentum. Constriction, sideways action on that 20 moving average, boom, on the hourly, provided us a get up and out from the specific, from that consolidation. So on the 4-hourly, you can just look at it. May be in everyone's best interest, I'm just going to say, for us to spend a bit of time on what? On the 20 moving average on the 4-hourly. Now the week's coming in, there may be some unsettled business here and there between London and between New York and guys all over as Asia is cranking away. What I'll say is, those are just the different global markets. What I'll say is it could be interesting to get this line a little bit lower. Yeah, to get that top standard deviation a little bit lower, compress it down, and the expectation that, hey, we're going to have a move. If we can leave this, if we can leave top line, flat top resistance as a target for everyone while we're compressing, then that might be a trade I like entering a little bit more. And again, what metric are we going to watch? Well, we're going to be watching, without a doubt, we're going to be watching. Still, guys, it's not dispositive, but that 4-hourly MACD histogram has been really, really nice. We're going to discuss one more thing. I'll let you guys go. It's going to be a great week here as Asia is already hot up and trading. Taking a look at what were the opportunities here. Now, looking at that specific trade I brought you guys last week, and really a condition, guys. If you traded it, that's your green, that's your gold way to go. In terms of the hit, though, Two, the 4 hourly oversold. We know three things can happen, right? The sellers could have continued to sell. That's option number one. We could have just continued to barrel to the downside. Always configure that in, account for that, please. Now, the second option is exactly what we're potentially looking at, and do pay attention to this. We're potentially looking at sellers regaining control from a midline level. So this is option number two, and we have one of two options really left here. Now, this specific move down where sellers could regain control would mean a drop, which means we're in this position again. We've been here multiple times in the multiple last number of weeks where you've entered on the 4 hourly. We're at a mid-level. I told you guys here the same thing, didn't I? Absolutely. I said, this is your moment, right? Your moment in time here. You're going to define whether or not you choose to book in those profits or whether or not you risk them guys flowing off the balance sheet, which they did last week, right? They certainly did. So that mid-level take was a smart move last week. Just understand the risk, right? Two things can happen really left from now, from what we're looking at now. We're at the mid-level. Boom. Sellers can engage and take control, or we can get that sweet ride all the way up to overbought. That's the swing trade you want. Just understand you're going to have to get up and over that 4 hourly top line standard deviation. You got it right. So in the context of what we're looking at, again, the smartest move right now may be there could be some great trades on the lower time frames along this 20 moving average. That's what I would personally like to see, because I love trading on those lower time frames. Some of the best traders I know are there all day long. These are some more macro moves that I'm giving you generally, and why, because I try to bring you a video. I try and let that video guys, get out and reach the necessary parties involved, and for you to be able to execute your trades and be able to respond to your trades, to hold your trades. Sometimes I want to follow up very quickly, but I think, well, the trade could continue to go up, so I'll wait a full day, sometimes 2 days, to bring you another video because, well, that was a really great entry, right? And do understand these are not dispositive. I tell everyone this is the riskiest business you can be in, day trading, particularly Bitcoin, and you know that. So to get that full swing from oversold to overbought, it's a possibility. It's also a possibility sellers could gain control. And if you're looking for that 100% metric, the most reliable thing that we have found so far, I just say recently, has been the 4 hourly MACD histogram. So don't trust me. You find your metric, what's been the most consistent in terms of back testing. We're going to say it's not fully reliable in terms of being dispositive with a level of certainty, but we are going to keep a strong eye on this 4 hourly. And before I forget what had me itching in terms of a trigger finger all weekend long, you got it. The daily, the histogram, the MACD swinging to the upside was a huge issue when all of a sudden it started to flash. And I noticed, I said, well, maybe this is just TradingView having some fun with me, right? But then the next bar set after the next bar flashed after this one set. So we're seeing a potential for a rebound on the daily MACD, which is a big deal. We know this was a critical level of concern in terms of a pickup area. That low, we'll just call it the daily standard deviation to the downside. And on the weekly, of course, as well, just back test. This would be the one aberration and thing to keep an eye on. If you're a bear and you want to go down, you're tired of hearing all this, conditional bull talk, just look at the one issue in terms of the specific MACD histogram. Now, we have certainly had a lot more aggressive moves based upon the weekly. And if you backtest the weekly and the daily, you're going to see some distinct moves on the weekly versus what we're seeing on the daily. I invite you to backtest, to compare, and to see how much more aggressive we could become on the weekly than we currently are, right? And it's like the catch is, however, look at your RSI. We're nearly at that threshold to the downside, which is confluent with that lower standard deviation. But in total, if you were to look at the levels of expression of the histogram to the downside on the weekly, you see we've been much more aggressive than we currently are. You guys agree? We've had some bigger, right? Big moves here as expressed by the histogram on the MACD, whereas we appear to be at a functional limit on the RSI, and we appear to be at a functional limit expressed by the specific lower standard deviation. Everybody thumbs up, we concur, yes. And you'll want to compare that, of course, to the daily. And the daily, the reason for the, let's just say for pointing out the weekly versus the daily, if you were to, for instance, go on your MACD histogram, just look left. Look left and see how far or how long it has been since we've really been this just plunged to the downside in the form of expression to the downside of the MACD histogram. You'll just see, like, really, if you really get fine-tuned with it, we're further down than we've been in quite a while, okay? And you can stretch this all the way back here, and yeah, it continues, guys. We're really expressed at the downside on the daily MACD. This was the 2021. You guys got it. So we're really far down on the daily. However, on that weekly, just pay attention. On the weekly, we still got plenty of room on the downside if we're going to do some comparative analysis on backtesting. So just note that weekly versus the daily, kind of just call it the backdrop of what we're looking at. No need for severe concern, but try and unwind that to the best that you can with all eyes on the 4 hourly and with the dependence. I'd say the dependability that we found on this specific metric recently on the 4 hourly MACD that kind of makes up for any inconsistencies, though do be prepared, right? Never overexposed to any higher price, always with heavy cash reserves. Want to shout out to the VIP, J-Mac and Luke in the back, and Daniel, way to trade. This is London with MarketHedge. We'll come back to you soon, and I'll probably be executing a trade when you guys see me next. Excited to get this specific account up over 400. Guys, we want to do that not to one account. We want to do it to 10, 20 accounts, right? Not just one. Stacking those heavy cash reserves. That's the name of the game. We'll talk to you soon. Let's have a great trading week. This is London with MarketHedge.